If you think gold bars are just shiny paperweights, wait till you see this. Join Money Smart Basics today as we dive into the challenge of investing in real gold bars. Can we strike gold and turn a profit? Let's see. Remember to like and subscribe for more Money Smart Basics videos. If you have any suggestions for financial literacy topics, please leave a comment. Stay until the end to receive a bonus tip. Look in the description below for wealth-building tools and income opportunities. Gold has captivated humanity for millennia. From the ancient civilizations of Egypt and Mesopotamia to the empires of Rome and Greece, gold has been a constant symbol of wealth, power, and divine favor. Its unique properties, such as its malleability and resistance to tarnish, made it an ideal material for crafting intricate jewelry, religious artifacts, and even currency. The allure of gold drove explorers to the farthest corners of the earth, sparking legendary quests and conquests. Its brilliance and rarity made it a symbol of power and wealth. Throughout history, gold has adorned the crowns of kings and queens, been hoarded in treasure chests, and used as a medium of exchange. The discovery of gold in various parts of the world, such as the California Gold Rush, led to mass migrations and the establishment of new settlements. Even today, gold's luster and intrinsic value continue to captivate people, making it a sought-after commodity in the form of jewelry, coins, and bars. Today, gold retains its allure, not just for its beauty but for its role as a financial safe haven. In times of economic uncertainty, investors flock to gold as a reliable store of value. Unlike paper currency, which can be devalued by inflation or government policies, gold maintains its worth over time. Financial advisors often recommend including gold in investment portfolios to mitigate risks and ensure long-term stability. The modern financial market offers various ways to invest in gold, from physical bars and coins to exchange-traded funds, ETFs, and mining stocks. In an uncertain world, gold offers stability and a hedge against inflation. When stock markets are volatile and currencies fluctuate, gold remains a steadfast asset. Its value tends to rise when other investments falter, providing a buffer against economic downturns. Historically, gold has performed well during periods of high inflation, as its purchasing power remains intact. This makes it an attractive option for those looking to protect their wealth from the eroding effects of inflation and currency devaluation. It is a tangible asset, immune to the whims of governments and central banks. Unlike digital currencies or stocks, which exist only in electronic form, gold is a physical commodity that can be held and stored. This tangibility gives investors a sense of security, knowing that their wealth is not subject to the same risks as other financial assets. Gold's independence from government control also means it cannot be easily manipulated or devalued, making it a reliable store of value in times of political or economic instability. For those seeking to diversify their portfolios and preserve their wealth, gold bars remain a compelling choice. Diversification is a key principle of sound investing, and gold provides a unique opportunity to balance risk and reward. By including gold in a diversified portfolio, investors can reduce their exposure to market volatility and enhance their overall financial resilience. Whether held in physical form or through financial instruments, gold continues to be a timeless and enduring asset, offering both beauty and security in an ever-changing world. The journey to acquiring gold bars begins with choosing the right source. Online dealers offer convenience and a vast selection. Local coin shops provide personalized service and expertise. Pawn shops may present bargains, but caution is advised. Direct purchases from mints guarantee authenticity, but might come with higher premiums. Each avenue has its merits and drawbacks. Careful consideration of your priorities is essential. Reputation is paramount when dealing with precious metals. Before committing to a purchase, thoroughly investigate potential dealers. Online reviews from reputable platforms offer valuable insights into customer experiences. Industry accreditations, such as those from the American Numismatic Association, ANA, or the Professional Numismatists Guild, PNG, signal credibility. Transparency in pricing, with clearly displayed premiums and fees, is another hallmark of a trustworthy dealer. Gold bars come in a variety of sizes and purities. From small, easily portable bars to large, hefty ones, the options are numerous. Each size and weight category serves a different purpose, and caters to different types of investors. Whether you are a small-scale investor or someone looking to make a significant investment, there is a gold bar that fits your needs. Investment-grade bars should have a minimum purity of 0.995 or 99.5% gold. This high level of purity ensures that the gold is of a quality that is recognized and accepted globally. When purchasing gold bars, always look for the hallmark and purity stamp, as these are indicators of the bar's authenticity and value. The higher the purity, the more valuable the gold bar. Smaller bars, while more manageable, typically carry higher premiums per ounce. This is because the cost of producing smaller bars is relatively higher compared to larger ones. Additionally, smaller bars are often more liquid, meaning they can be sold more easily and quickly. However, the convenience of smaller bars comes at a price, and investors should be aware of the higher premiums associated with them. Larger bars offer economies of scale but may be less flexible for smaller transactions. These bars are often preferred by institutional investors or those looking to make a substantial investment in gold. The cost per ounce is generally lower for larger bars, making them a more cost-effective option for long-term investment. However, their size and weight can make them less practical for everyday transactions or for those who may need to liquidate their assets quickly. Carefully consider your investment goals and budget when deciding on the weight and size of your purchase. Think about why you are investing in gold and what you hope to achieve. Are you looking for a long-term investment, or do you need something that can be easily liquidated? Your answers to these questions will help guide your decision. Additionally, consider the storage and security of your gold bars. Larger bars may require more secure storage solutions, while smaller bars can be more easily stored and transported. Ultimately, the right choice will depend on your individual needs and circumstances. Once you have chosen your gold bars, the transaction process is typically straightforward. Most dealers accept bank transfers, wire transfers, and credit cards for payment. However, be aware that credit card purchases may incur additional fees. Secure storage is crucial. Home storage, while convenient, carries the risk of theft or damage. Professional storage facilities offer enhanced security but come with associated fees. Section 6. Beyond the purchase fees, insurance, and allocation. Owning gold bars involves ongoing considerations. Storage fees, if you opt for professional storage, can vary significantly. Insurance coverage is essential to protect your investment from loss, theft, or damage. Strategic allocation is key. Financial experts generally recommend limiting gold to 5 to 10% of your overall portfolio. Section 7. The importance of expert guidance. Navigating the world of precious metals can be complex. Seeking guidance from a qualified financial advisor specializing in precious metals is invaluable. They can provide personalized advice, assess your risk tolerance, and help you integrate gold into your overall investment strategy. Section 8. Gold in the digital age. The digital revolution has extended to the gold market. Gold-backed exchange-traded funds, or ETFs, offer investors a convenient way to gain exposure to gold without the complexities of physical ownership. However, it's essential to understand the differences between owning physical gold and gold ETFs. Section 9. A prudent path to prosperity. Investing in gold bars is not a get-rich-quick scheme. It requires patience, diligence, and a clear understanding of the market dynamics. Gold has been a symbol of wealth and a store of value for centuries, and its allure remains strong even in modern times. It is a long-term strategy for preserving wealth and hedging against economic uncertainty. Unlike stocks or real estate, gold does not generate income, but it offers a unique form of security. During times of economic turmoil, gold often retains its value, providing a safe haven for investors. By understanding the intricacies of the market, conducting thorough research, and seeking expert advice, you can make informed decisions that align with your financial goals. It's essential to stay updated with global economic trends, geopolitical events, and market sentiments that can influence gold prices. Remember, gold has weathered the storms of time. It has been a reliable store of value through wars, economic depressions, and financial crises. Its historical performance provides a testament to its enduring value. With careful planning and a long-term perspective, it can continue to be a source of stability and prosperity for generations to come. Families have passed down gold as a legacy, ensuring financial security for their descendants. By incorporating gold into a diversified investment portfolio, you can balance risk and reward, safeguarding your wealth against unforeseen challenges. Additionally, gold comes in various forms, from bars and coins to ETFs and mining stocks, each with its own set of advantages and considerations. Physical gold offers tangible security, while paper gold provides liquidity and ease of trading. Understanding these options allows you to tailor your investment strategy to your specific needs and preferences. Attending financial seminars, reading market reports, and engaging with expert panels can further enhance your knowledge and confidence in gold investments. Continuous learning and staying informed are key to navigating the complexities of the gold market. Ultimately, a prudent path to prosperity involves a balanced approach, combining traditional wisdom with modern insights. By embracing the timeless value of gold and integrating it into a well-rounded financial plan, you can achieve lasting stability and growth, ensuring a prosperous future for yourself and your loved ones. Congratulations, you made it to the end of the video. With that, you are ahead of 90% of most people in America. Here is the bonus tip that we promised. Want a smart investment choice? Think gold bars. Gold holds value through economic ups and downs. It's a timeless asset protecting your wealth. Invest smart by invest in gold. The information in this video is for educational and entertainment purposes only, and is not intended as financial advice. We are not financial advisors, and the content should not be construed as professional financial advice. Always seek the advice of a qualified financial advisor or other professional regarding your specific financial situation. The use of any information provided in this video is solely at your own risk. Please remember to like, subscribe and comment for more Money Smart Basics videos.